Welcome back to the Deep Dive, everybody. This week has been, well, pretty wild in the markets, and we got a ton of listener questions and some pretty dense reports,
Yeah.
all pointing to, I think, one really big story.
Yeah.
There's been a huge market downturn, really across the globe.
Yeah. It's been pretty widespread and pretty deep.
Yeah, I mean, we're seeing the DJIA is down, what, over 4%?
Yeah, 4.1% to be exact, which is, a pretty substantial drop for the Dow.
Yeah, and then the S&P almost 5%, 4.86%.
Yeah, I mean that pretty much mirrors the Dow. They often move kind of in sync.
Right.
But then the Nasdaq really got hit hard, over 5%, 5.01%.
Yeah, and looking even beyond the U.S., Asia, Europe, everyone's feeling this, kind of reassessment that seems to be happening in the markets.
Yeah. No, you're absolutely right. It's not just a U.S. phenomenon. It's really a global kind of risk-off sentiment that we're seeing.
So we're talking about the ASX, Nikkei, Nifty 50, and then over in Europe, the StoxX 600, DAX, FTSE, all of them, showing pretty substantial declines.
Yeah, I mean, I think that's what really jumps out from the data you shared with me. It's just the breadth of this decline. It's not isolated to any one sector or region. It's really this pretty synchronized downturn across all the major global indexes.
Yeah, and what's I guess even more striking is that even the traditional safe haven assets, they haven't offered much protection this time around. I mean, gold is down over 2.5%, and silver has taken a much bigger hit, almost 7%.
Yeah, I mean, you usually expect those assets to kind of hold their value, or even go up when things get a little shaky in the markets.
Yeah, exactly. So it really suggests that whatever's driving this downturn, it's powerful enough to kind of affect even those assets that are typically considered to be safe harbors.
Yeah, no, it definitely goes against the the conventional wisdom about diversifying into precious metals during times of uncertainty. So I think it really begs the question, what is at the heart of this kind of widespread unease in the market?
Yeah, yeah. And so that brings us to, I guess, a really interesting contrast that a lot of the sources, that you sent me were kind of highlighting is, amidst all of this decline, Bitcoin is actually holding steady.
Yeah, it really is.
It's around $84,000.
Yeah, yeah.
And we even saw that tweet circulating. I think it was from a pretty well-known market analyst. And they were highlighting, this unusual stability of Bitcoin against, like this sea of red, in the traditional markets.
Right. And I think that contrast is actually very telling. While it's still early days, in terms of having enough long-term data to, make any definitive conclusions, I do think that these kinds of events, they provide almost a real-time test of this whole thesis about Bitcoin, being a store of value.
Right.
Or a hedge against traditional market volatility.
Yeah, yeah. And whether or not this is a sustained trend, I guess only time will tell. But, it's definitely noteworthy and something that we'll continue to watch for sure.
For sure.
So let's try to unpack, I guess, what really seemed to be like the central thread connecting all of your sources this week.
Sure.
And, this is something that I'm sure a lot of our listeners are kind of glued to, as things continue to develop.
Yeah.
But it really seems like the escalating tariff situation that President Trump, has kind of initiated. This seems to be the primary catalyst for the market jitters that we've been seeing.
Yeah. I mean, I think there's a pretty broad consensus among the analysts that this is the main trigger for the current volatility. Obviously there are always multiple factors at play, but this seems to be the one that's really kind of spooked the market.
So can you maybe kind of take us through exactly what President Trump announced and why it's having this effect on the market?
Yeah. So essentially, what President Trump announced were significant new tariffs on a pretty wide range of imported goods. The specific details of these tariffs, they vary across different sectors, but the overall message is really one of a move towards a more protectionist trade policy.
Okay.
And that kind of policy shift, it introduces a significant amount of uncertainty into the global economic outlook. And, as we know, markets really hate uncertainty.
Right. Yeah, that makes sense. So this obviously didn't go unnoticed by other major players in the global market, particularly China.
Right.
So what has been their immediate response?
Yeah, so China's response was pretty swift and pretty direct. They announced a 34% tariff on all goods imported from the U.S.
Wow.
And that's set to take effect on April 10th.
Okay.
The fact that this mirrors the 34% figure that President Trump had previously mentioned, it feels quite deliberate. Almost like a tit for tat kind of counter move.
Right. So a clear retaliatory measure then.
Yeah, definitely a retaliatory measure.
But it wasn't just tariffs though.
No, you're right.
There was also yeah, I guess the reports were also mentioning export controls on certain rare earth metals.
Yeah.
So why is that significant?
Yeah. That's a potentially very, very strategic move by China. They've imposed export controls on 7 types of rare earth metals, and these metals are absolutely crucial components in a whole range of high-tech industries. Everything from electronics to defense applications.
Oh, wow.
So by potentially limiting the supply of these critical materials, China is really leveraging its dominant position in this sector, and that adds another, I guess, another really significant layer of complexity to this whole unfolding trade dispute.
Yeah, definitely. So this is where it gets even more interesting, I guess. One of your sources highlighted this really kind of interesting historical parallel. And apparently, this is only the 3rd time in U.S. history
Yeah.
that we've seen such widespread tariffs being implemented.
Yeah, it's pretty rare.
The other times that it's happened were way back in 1828. And then in 1930.
Right.
So that roughly 100-year gap is pretty striking, isn't it?
Yeah, no, it is. It's definitely a striking historical parallel. And I think the historical context of the 1930 tariffs in particular, that really is a cause for concern, because those tariffs were, they were enacted during the Great Depression.
Right.
And they're widely seen by economists as having actually exacerbated and prolonged that economic crisis, by triggering these retaliatory tariffs from other countries, really disrupting global trade flows. So, I think history really teaches us that, these kinds of protectionist measures, they can backfire.
Right. So I guess it's understandable why, that kind of historical echo, might be making some investors a little bit nervous.
Sure.
So, when this news kind of broke, we saw a lot of different reactions.
Right.
One of the ones that I know you highlighted for me was Jim Cramer.
Yep.
And I know he was kind of he was described as being cautiously optimistic.
Right.
So what was the basis for that perspective?
So I think his view, it suggests a belief that the current administration, they understand the inherent risks that are associated with these tariffs.
Okay.
And that they believe they can, effectively manage those risks.
Okay.
I think it's a perspective that assumes that, these are kind of calculated moves, that are aimed at achieving specific, longer term strategic goals.
Okay. Yeah.
Even if there is some short-term economic pain.
Right.
But I think it's also important to note that not everyone shares that optimism.
Right.
There are other analyses that definitely painted a less rosy picture.
Yeah, for sure. In fact, some of those viewpoints were actually describing, these tariffs as reckless and potentially very damaging. And on the other hand, there were also those who were arguing, from a more I guess a longer-term strategic, kind of rationale.
Right.
They were, suggesting that these measures, while disruptive in the short term, could ultimately end up, benefiting the U.S. economy by kind of reshaping these trade relationships.
Right.
Or even strengthening domestic industries.
Right.
So, I mean, it really kind of underscores just the wide spectrum of opinions that are out there about this whole situation.
Yeah, no, absolutely. And I think it's fascinating to see how those different perspectives, they're immediately reflected in how the market reacts.
So let's talk about that reaction. What has been, I guess the immediate market fallout from this tariff situation?
Yeah, so the fallout has been, well, to put it mildly, it's been pretty dramatic.
Yeah.
We're talking about a reported $7 trillion loss in U.S. stock market value since Wednesday.
Yeah.
Which is, it's just a staggering figure. And it really underscores how quickly global events can really erode wealth.
Yeah. Yeah. I mean, that really puts it into perspective.
Yeah, and the sharp single day drops that we've seen, like the Dow Jones plummeting 2,200 points in one day,
Fine.
or the S&P 500 losing 10% in just 2 days.
With-
That's it's indicative of a significant what they call flight to safety,
Mm-hmm.
um, and a really rapid reassessment of risk across the entire market.
Yeah. So speaking of risk reassessment, you had sent me a report from J.P. Morgan, and they actually have a pretty stark warning when it comes to this whole situation.
Yeah, they've definitely sounded the alarm bells.
Yeah, they've increased their probability of a global recession this year.
Yep.
To 60%.
Yeah, and that's a pretty significant jump from where they were previously.
Yeah. So what are the key factors that are driving that kind of I guess pessimistic assessment from them?
So their analysis, it really points to several factors, and they're all interconnected.
Okay.
The first one is, they really emphasize the stated goal of these U.S. tariffs, which is to eliminate bilateral trade deficits.
Okay.
And they point out that the proposed average tariff increase of 22%, that represents the largest jump in the U.S. since 1968.
Wow.
So that's a pretty substantial shock to the global economic system.
Yeah. Yeah. So a major policy shift creating a major shock. What else did they kind of highlight?
Yeah, so the second thing they highlight is that this initial shock of the tariffs, it's very likely to be amplified through these retaliatory measures from other countries.
Okay.
And we're already seeing that with China's response.
Mm.
And that creates this potentially escalating cycle of trade barriers.
Right. Right.
And then on top of that, they also anticipate that there are going to be significant disruptions to global supply chains.
Yeah.
As businesses struggle to kind of adapt to this new tariff landscape. And then, of course, you also have negative market sentiment, which we've already observed. And that really just kind of feeds into that whole, negative feedback loop, and kind of exacerbates any economic downturn.
Yeah. Yeah. Now they did say that a U.S. specific recession, they said that was considered less likely, at least for now.
Right.
So what was the reasoning there?
So their reasoning was that while the global economy as a whole faces a heightened risk of recession due to these widespread trade disruptions, the U.S. economy, it might possess some inherent strength that could provide some degree of insulation.
Right.
But they certainly didn't rule out a U.S. recession entirely. They acknowledge that it's definitely a distinct possibility within the broader global context.
Right. Right. So, as if all of that wasn't enough to kind of think about, they also anticipate that there are going to be, some policy responses like looser fiscal and monetary policies.
Right.
So what are the implications of that?
Yeah, so they basically anticipate that governments and central banks around the world are going to try to, kind of counteract the negative economic effects of these tariffs through measures like, increased government spending or interest rate cuts by, the Federal Reserve, the Fed.
Okay.
But, and this is a big but, they also caution that these measures, they might only provide, temporary relief.
Okay.
And that they could actually have, negative long-term consequences for the economy, potentially leading to things like, increased national debt or even, inflationary pressures down the line.
Right. So kind of solving one problem, but maybe creating another.
Yeah. Yeah, exactly. And I think that's something that policymakers are really going to have to grapple with, as they try to, kind of navigate this very, very complex situation.
Right. And then I guess the biggest long-term concern that J.P. Morgan raised in their analysis was this idea that there could be lasting damage to the supply side of the economy.
Yeah, I mean that's a really big concern.
So can you maybe just kind of explain what that means?
Yeah. So when we talk about the supply side of the economy, we're really referring to the capacity of businesses to produce and deliver goods and services efficiently.
Okay.
And tariffs, they can lead to higher costs for businesses, because of those increased import prices.
Mm-hmm.
And that can result in, reduced investment. It can also lead to, kind of a fragmentation of these international production networks as companies try to, kind of rearrange things to avoid those tariffs.
Mm-hmm.
And this kind of, this structural damage, it can have, really long lasting, negative effects on overall productivity
Right.
and long-term economic growth.
Right. So I guess kind of thinking about how all of this kind of plays out. J.P. Morgan also introduced this game theory perspective to their analysis,
Right.
and I'm really curious to kind of hear more about how that framework kind of applies here.
So their game theory approach basically suggests that while most countries, they might ultimately choose to negotiate, tariff reductions to avoid this kind of prolonged economic pain,
Right.
essentially recognizing that cooperation is in their long-term self-interest.
Mm.
But there's a significant risk that some key players, and potentially, China, might be included in this group. They might continue this trade conflict if they perceive that there's some kind of, strategic advantage in doing so.
Okay.
And this kind of ongoing conflict, it significantly raises the likelihood that, central banks, including, the Fed here in the U.S.,
Right.
that they're going to be compelled to cut interest rates. And implement a looser monetary policy to try and kind of cushion the resulting economic fallout. So essentially, it's about understanding how each country's rational self-interest
Right.
in this trade war could actually lead to some unintended negative outcomes for everyone involved.
Yeah. Yeah. And speaking of those interest rate cuts, it seems like the market is pretty much anticipating them already. The report you sent me mentioned that the market is actually pricing in a full 1% reduction by the end of the year, potentially even starting as early as June.
Yeah, that's right. I mean, that's a pretty strong indicator of, the market's expectations, that the economic consequences of these tariffs are going to, necessitate some kind of response from the Fed.
Yeah. So it's not just I guess the major economic powers that are reacting to all of this. We've also seen some pretty interesting responses from other countries like Vietnam, Argentina, and Cambodia.
Right.
So what's happening there?
Yeah, so I think these reactions, they really highlight, the diverse ways in which countries are attempting to navigate this kind of evolving tariff landscape.
Yep.
So for instance, Vietnam, they're reportedly actively negotiating with the U.S. to try to secure lower tariffs, on a range of their exported products.
Okay.
Argentina is apparently nearing a pretty significant agreement to actually become the first country to have zero tariffs with the U.S.
Wow.
Which would be a pretty notable development.
Yeah.
And then Cambodia's prime minister has offered to eliminate tariffs on several categories of U.S. goods.
Wow.
So it seems like some countries are really kind of proactively seeking ways to to either mitigate the negative impacts of these tariffs,
Right.
or even potentially gain a competitive advantage in this kind of new global trade environment.
Right. And then I guess another report that you had sent over mentioned that the UK is also looking to kind of forge a new trade agreement with the U.S.
Yeah.
Specifically aimed at removing these tariffs.
Yeah, that's right. The UK Prime Minister has been he's been pretty vocal about his desire to strengthen bilateral trade ties with the U.S.
Mhm.
and to potentially offset any adverse effects that might result from this broader global trade tension.
Right, right. So I guess moving beyond kind of the immediate tariff implications, There were a couple of other interesting news items that came up in your sources this week. One of them was the TikTok situation.
Right.
It seems like that has taken another kind of unexpected turn.
It has, yeah. It's been a bit of a roller coaster ride for TikTok. So President Trump had granted another extension for the TikTok deal, citing the need for further regulatory approvals.
Right.
But the latest report suggests that China has actually put a halt on the deal in light of these recent tariff announcements.
Oh, wow.
So this development it raises some really significant questions about TikTok's operational independence, and how these kinds of escalating geopolitical tensions can really directly impact seemingly unrelated business transactions.
Right.
And it adds another layer of uncertainty to the future of the platform here in the U.S.
Yeah, yeah, for sure. And then the other kind of I guess interesting development was GameStop.
Oh yeah, GameStop.
Of all the companies to see a notable surge in stock price amidst this widespread market downturn, GameStop certainly stands out.
It does. I mean, it's kind of the meme stock that never really went away.
Yeah, exactly.
But this time it seems like Ryan Cohen's recent stock purchase, that really seems to have been a significant factor in this recent surge.
Yeah, I mean his investment was a pretty substantial vote of confidence,
Mhm.
in the company's future direction,
Right.
and it kind of signaled to the market that he believes in their long-term prospects. And what's also interesting is that this surge coincided with reports of just exceptionally high retail investor buying activity,
Right.
the highest we've seen in a decade.
Yeah. It seems like the retail investors are back in the game.
Yeah, they're definitely a force to be reckoned with.
Yeah.
And GameStop was specifically mentioned as being one of the popular choices among those retail investors. So it's a pretty potent reminder of the continued influence that retail investors can have in certain segments of the market.
Yeah. Absolutely.
And then to kind of add to this whole I guess saga with GameStop. Um, all of this is happening as they're announcing a significant number of store closures,
Yeah. That's right.
which, I guess potentially hints at this kind of strategic shift towards a more Bitcoin-focused business model, much like MicroStrategy has been doing.
Right. Yeah. It's a pretty radical transformation for a traditional brick and mortar retailer.
Yeah.
But it really does kind of underscore the growing influence of digital assets, and blockchain technology, across various industries.
Right.
So whether or not this strategic shift will ultimately prove successful for GameStop in the long run, I guess only time will tell. But the market's immediate reaction today was certainly noteworthy. They were actually bucking the overall downward trend.
Yeah, yeah, it's pretty incredible to see. So finally, let's touch on I guess the Federal Reserve's current stance.
Sure.
Despite the fact that the market is pretty clearly anticipating these future interest rate cuts, Fed Chair Jerome Powell, he seems to be advocating for a more patient approach.
Yeah, he's definitely preaching a bit of caution.
Yeah.
He's basically indicated that the Fed they need to see more conclusive data to confirm a clear downward trend in inflation
Mhm.
before they consider any adjustments to the current interest rate policy. He's really emphasizing the importance of maintaining stable long-term inflation expectations,
Okay.
and ensuring overall price stability within the economy. So that suggests that there might be a bit of a disconnect between the Fed's current thinking and the market's rather strong expectations for these imminent interest rate cuts.
Yeah, yeah. So which brings us back, I guess, in a way to Bitcoin.
Right.
The relative stability of Bitcoin. In the context of all of this broader market turmoil and economic uncertainty.
Right.
The fact that it's holding steady around that $84,000 level
Mm.
continues to be a significant point of discussion.
Yeah, I mean, it's definitely something that people are watching very closely.
Yeah, and I think your source even referenced President Bukele's
Yeah.
his longstanding ODL advice.
Right, which basically means hold on for dear life.
Exactly. So I guess to kind of bring it all together, this week has been yeah, it's been significantly shaped by the fallout from these newly implemented tariffs.
Yeah.
We're seeing some pretty serious warnings about a potential global recession.
Yeah.
We're seeing this wide range of reactions to these policy changes.
Right.
And even some unexpected pockets of resilience in areas like Bitcoin and surprisingly GameStop.
Yeah, no, it's definitely been a pretty eventful week. And I think, one of the things that your sources really highlight is just how interconnected uh, you know, global markets are,
Yeah.
and the speed with which policy decisions they can cascade through the financial system.
Right, right. So this has been a truly fascinating, albeit somewhat concerning, deep dive into a situation that's still very much unfolding.
Yeah, no,
Yeah.
absolutely.
So I guess the question on everyone's mind is, considering the historical parallels that we've talked about and the all the different reactions that we've examined, what do you think is the most probable long-term outcome, of this escalating tariff situation, and maybe even more importantly, like what specific indicators, are you going to be watching closely to kind of gauge the